In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, America's push against Huawei and 5G escalates tensions between the U.S. and China and could have a major impact on the supply chain and national security. We will tell you how. Plus, trade tensions simmering. Chinese state media signals a lack of interest in talks. Financial markets still on edge after 2 weeks of twists and turns. And Hewlett-Packard Enterprise will buy supercomputer maker Cray in a deal valued at $1.3 billion. We will speak with HPE President and CEO Antonio Neri. But first, to our top story, Bloomberg is reporting Huawei has stockpiled enough chips and vital components to keep its business running for at least 3 months as the U.S. curtails its access to American technology. This week, President Trump signed an executive order that is expected to restrict Huawei and fellow Chinese telecom company ZTE from buying essential chips and other equipment from U.S. companies. For reaction, I want to bring in Jamil Jaffer, Vice President at IronNet Cybersecurity in Washington. Before joining IronNet, he was the Chief Counsel and Senior Advisor for the Senate Foreign Relations Committee and Senior Counsel to the House Intelligence Committee. So, Jamil, a lot of U.S. companies falling on this news. We're talking about companies like Qualcomm and Micron that supply these telecom companies with chips, with networking gear. Is this the right call by the Trump administration?
Well, I think it is, Emily. Look, the authority the president provided in his emergency declaration is a broad authority, but it can be wielded with a scalpel, right? It all depends on how the Commerce Department is going to use it. And the new interim administrator there at the NTIA, Diane Ronaldo, is a really sharp person. She's been working on these issues for over a decade. And I think is going to use this tool very carefully to really go after the threat that Huawei and ZTE pose and other companies, frankly, pose from a national security perspective and not necessarily as a cudgel.
So the question is, what is the threat that they really posed? I've been talking to U.S. executives all week, well-positioned in the tech industry, to know something about this, who say there is no evidence. They're anchored by this decision. Are they wrong?
Well, look, Emily, I think so. I mean, the National Security Institute at George Mason University, which I run, actually put out a report written by a couple of former House Intelligence Committee staffers that demonstrates the very real national security threat that companies like Huawei and ZTE pose to our economy and to our national security. And so, it's worthwhile to look at that, but it's also worthwhile to look at their connections to the Chinese government. And the reality is that they spend a lot of time marketing their product, but they're doing it on the back of low interest loans, no interest loans for the Chinese government. So they're not really fairly competing in the economic marketplace either, and that's a real problem from an economic security perspective also.
So what is the evidence that Huawei could be involved in espionage, could be a threat to national security? Of course, we know this case by the U.S. Justice Department about them violating sanctions on Iran. That's a different story. But what is the evidence that Huawei is a threat to national security?
Well, on the national security front, obviously having a company with such close ties to the Chinese government that refuses to talk about its relationships, what it will and what it won't do, and the fact that it can run an entire national telecommunications network, puts it right at the heart of these networks. And so the real threat that it poses is not necessarily what you might do today, but what you might be able to do in the future. And so, yes, it's true, as the UK has said, you might be able to mitigate some of that by looking at each piece of gear, but every day those systems are being updated constantly in the background, and at any point a flaw or a vulnerability could be introduced that could be exploited by a nation-state government. And we have a lot of evidence to show that nation-states do that kind of activity. It's not unusual. And so it's a concern. And so if you're going to look at what runs your core networks, you have to say to yourself, do you want it to be a U.S. company, a Western company, or a Chinese company? And that's a fair decision to sort of debate. Right now, the U.S.'s view is it's more important to keep Huawei out than it is to get the lower prices that it might bring to the table.
Now, that said, not every company is taking the same stance as the United States. Take a listen to reaction we got on this topic from lawmakers in Europe, business leaders in Europe, starting with French President Emmanuel Macron.
Our perspective is not to block Huawei or any company, it's to preserve our national security and the European sovereignty. But I think launching now a technological war or a trade war vis-à-vis any other country is not appropriate. First, it's not the best way to defend your national security.
The UK needs to make its own decisions about the security of our telecoms infrastructure. And what I've asked to happen already before this decision is for a properly based review of our telecom supply chain.
I do want to say that, of course, in the 5G world, security is a much more important topic. And part of it is equipment, part of it is security solutions.
So, Jamil, let's talk about the cascading implications of the U.S. taking this position in the middle of a trade war. And Commerce Secretary Wilbur Ross on Bloomberg Television yesterday tried to make it clear that what's happening with Huawei has nothing to do with the trade war, but it is very difficult to separate the two. How could this impact the ongoing negotiations or lack thereof between the United States and China?
Well, certainly, Emily, it raises the stakes. There's no question about that. Secretary Ross is absolutely correct to say that this doesn't have a lot to do with the trade war. Fact of the matter is that the U.S. government talked about Huawei and the threats from Huawei back in 2012. And so we've been talking about this issue for quite a while. The Obama administration considered action, and the Trump administration has long considered action. They only just took it recently. I mean, they haven't yet acted directly against Huawei except to put them on the entity list at the Commerce Department, which means that this EO hasn't been used yet, but it likely will be, as you point out. And so the question is, how do you use it? What are the tools you use? And how can you lever those tools up and down depending on what's going on, both with the trade situation, but also the national security situation? So they may have it may actually provide some leverage in the trade debates, but it also will be used as a national security tool for sure. And some of that won't go away regardless of how the trade situation was resolved.
Now, the folks I've talked to who are not supportive of the president's decision here, they ask, when will it stop? Where do we draw the line? Could we at some days see the United States keeping certain people from entering the country or studying in the country because they have ties to China? Do you have a sense or an opinion on where this should end?
Well, Emily, that's a great question. You know, look, I mean, nobody's talking about restricting travel by anybody. That's not what's on the table right now. We're talking about transactions of specific technologies. And we're talking about, again, a tool that can be used in a variety of ways. And you've got to look at the folks at the Commerce Department who are going to be doing this. And again, like I said, I think Diane Ronaldo will really do a good job of doing this. That being said, I think it's also important to point out that there are a huge number of foreign students that study in the United States every year who get their PhDs here. And then we force them to go home, keeping very few of them here to work in American industry. We send them home to their countries to build, huge companies and be really successful. You got to look at our own immigration policy and say there's something wrong with our own immigration policy if we're letting people in, train them in the best schools, and then forcing them to go back home and take that technology and that innovation back home. We should be keeping those people here and encouraging that development, and that's obviously a challenge for this administration also.
All right, well, lots of issues that this opens up. Jamil Jaffer with IronNet Cybersecurity. Of course, we're going to continue to follow new developments.
Thanks, Emily.
Well, Amazon is ramping up its drive into the European food and grocery business. The world's largest online retailer leading a $575 million investment in Deliveroo. The London-based startup competes in meal delivery against Uber and Just Eat. London is one of the most competitive markets for this industry. Amazon closed down its London-focused food delivery business last year. Deliveroo has raised $1.5 billion to date. Coming up, Hewlett-Packard Enterprise is making its biggest purchase in 4 years. CEO Antonio Neri breaks down the latest acquisition and company's direction next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. HPE is pushing into high-end computing. Bloomberg was first to report the enterprise company is buying supercomputer maker Cray in a deal valued at about $1.4 billion. The acquisition is HPE's largest in 4 years and strengthens its position against IBM. Shares of Cray jumped as much as 19% on the news. Joining us on the phone to discuss, HPE CEO Antonio Neri. Antonio, thanks so much for calling in. So talk to us about why. What was the driving force of this deal, and how does it add to what you're trying to do at HPE?
Hi, Emily. Thanks for having me today. Super excited about the announcement today. the main reason why we decided to pursue this acquisition is because the data around us is exploding. And that data has value, and the need to process that data faster continues to grow. And the need for high-performance computing is one element of processing data faster. So the combination of Cray technologies with Hewlett-Packard Enterprise portfolio, both HP Apollo and as well as SGI, give us a unique set of capabilities to accelerate business outcome from that data. And workloads we are talking here about, Emily, are machine learning, AI, as well as big data-intensive workloads that require these capabilities.
So we know Cray has supercomputers. They've also got major government contracts. Is there anything in particular that's attractive about those government contracts?
Sure. Cray has two-thirds of the business going from the government side, one-third from the commercial. Hewlett-Packard Enterprise is the opposite, two-thirds from the commercial side, one-third from the government side. And obviously the government has already requested to Cray to build an exascale computing. And that's on the basis of the foundation technologies that Cray has developed for some time, which is what we call the interconnect fabric. And so for us, that level of innovation is important to scale our portfolio and continue to enter new markets like oil and gas, manufacturing, as well as academia.
Now, HP, the former HP before it broke up, was famous for making some not-so-smart acquisitions, Autonomy, a big one, being one of them. Cray's gross profits have fallen over the last couple of years, and they forecast a substantial net loss. How does that impact HPE's bottom line?
So I have done now, Emily, 13 acquisitions with this one, and we have had an incredible discipline based on return on invested capital, where we add intellectual property as well as talent to the organization. And each of them has been very, very successful, including Aruba Networks as well as what I call the SGI acquisition, Nimble Storage, and so forth. They have been all very successful. For us, if you think about this type of business, obviously has been a little bit lumpy on the Cray side, but that's because it takes time to build the systems with CapEx up front and then acceptance on the back end to recognize revenue. So we believe the combination of Cray at our scale, which is significantly larger, will smooth that transition from the revenue profit perspective and also limit the CapEx investment because both companies have similar capabilities, and now we can use both in a scale way we couldn't do before.
Now, I got to ask you about what's going on in the markets. There is fear that trade talks between the U.S. and China have stalled, that we are going to be plunged into a Cold War with China. The markets have been roiled by this. How concerned are you, and what about the impact potentially on HPE?
Well, listen, we obviously want an open market where everybody can innovate and participate. Obviously, this situation with tariff and global trade is a concern because it actually creates uncertainty and it could slow down the economy. Now, we believe the sooner we solve that problem, the better it is. But there is demand out there driven by the need to process data, the need for advancing what we call the way people live and work. But obviously, solving this problem is fundamental for stability and confidence, both on the customer side and on the market side.
Now, clearly, there's still a lot of uncertainty here. Are you mapping out internally different strategies? Let's say a deal doesn't happen. Let's say we go into a Cold War. Are you mapping out next steps? And then on the other hand, let's say, President Trump and President Xi come to an agreement and things go back to normal. How are you navigating these decisions internally?
Well, obviously, we continue to monitor the macroeconomic environment and making sure we have the right strategy for each of the markets. We have a unique setup in China. I don't know if you recall, Emily, but we had an asset there where we participated with a joint venture with a Chinese partner of us. We own 49%, and that has unlocked significant value in China. We believe that's a smart way to participate in China because, obviously, being more Chinese than U.S. is what it takes. In the meantime, obviously, this is a good return for shareholders. But for us, looking at where we build our products, how we procure components, the entire supply chain is something we assess on an ongoing basis for cost, for scalability, for protection, and ultimately for ability to serve our customers in the time frames they need. So obviously, we have alternative plans depending on how this is going to evolve. But right now, we feel very confident that we have the contingency plans in place to navigate through this.
All right, HPE CEO Antonio Neri. Antonio, good to have you call in, and thanks for your insight there on the broader markets. Well, Fiat Chrysler has learned that winning over pickup truck buyers means more than just having a big engine under the hood. It's putting that knowledge to use in the Ram 1500. The redesigned pickup has an Apple iPad-inspired 12-inch touchscreen in the center console. The big display has helped the Ram truck line pass by the Chevy Silverado into second place in the U.S. market. Coming up, the fastest man alive is trading in his cleats for a scooter? How Usain Bolt is trying to lap the field by investing in mobility. That's next. This is Bloomberg. Usain Bolt, the fastest man who ever lived. The sprinting legend could now be leaving a different sort of competition in his dust. Bolt, the co-founder of Bolt Mobility, unveiled a small electric car with a swappable battery at Vivatech in Paris. The company also started deploying shared electric scooters in the French capital this week. Bloomberg caught up with Bolt and asked why the 8-time gold medalist isn't interested in speed this time around.
For me, the problem is everyone is just trying to get into the market. They're not thinking about consumers or about how they develop their product. They're just trying to get into the market. But with us, we took our time developing our product. If you see the new Chariot that we are now promoting, we thought about storage for water or coffee, or for ladies' handbags, you have a storage area. And we also think about your phone, because we don't want to have your phone in your hand. So we've thought about everything because we think about the consumer and not just trying to make a quick buck, quick dollars. So it's something that we're working on and is out there, and we're just trying to promote it and let them see that we have the best product, and if you have the best product, people will use it.
We've seen many athletes, such as Serena Williams as well, for example, investing in VCs, investing in tech.
Yeah.
What's your strategy here? You're an investor, you want to invest in other tech as well?
For me, I take it a step at a time. I just started out in business, and this is my first big investment. I'm a co-founder of it, so it's my big investment. So for me, I'm taking it a step at a time, and I think tech is the future for sure. So I feel like it's taking a step at a time, and we'll move forward. But right now, the Bolt company, Usain Bolt company, is moving forward, and the Bolt e-scooters will be a big thing of the future, and I'm looking forward to this changing the world.
And also in Paris, there's been new regulation because these e-scooters are considered quite dangerous. So now you can't use them on the sidewalk, and you can be fined like quite a lot of money for a normal person, more than 100 euros, because it's pretty dangerous. Aren't you worried about this?
For me, we are focused on trying to help in any way. We work with officials. We want regulations so we know what the people want and what the government wants us to do. So I agree with getting new regulations, but I feel like scooters that we have are safe. Because that's it's in our DNA. That's our prior commitment. That's what we want.
That was sprinting world champion turned e-scooter investor Usain Bolt. Staying with Vivatech in Paris, Gillian Tans, the CEO of Booking.com, spoke to Bloomberg about how France's digital tax will affect their business and the impact they're seeing from the U.S. trade war with China.
Yeah, so I think if you think about trade wars or Brexit, there's many elements, of course, which have an impact even on travel. For me, it's important that we keep thinking about that and work together, because I think technology will evolve and it requires really people to come together and solve these type of challenges.
Is trade war having actually an impact on booking?
I mean, there's many elements that happen in the world that have an impact on travel. Luckily, people do keep traveling, and you see, but people might make different choices. But Booking.com is such a global business.
Are your bookings actually up ahead of this summer?
You mean for this summer?
Yes.
Yeah, there's already many people that are really booking their trips for the upcoming summer. Yes.
So is it up compared to last year, for example?
Yeah, well, as people have seen, we are growing, so that is up compared to last summer, yes.
You attended the Tech for Good summit with the French President Emmanuel Macron last night in Paris. What's your take on Macron's proactive approach to attracting tech and to trying to make tech better?
Yeah, I really admire Macron because he brings people together. He sets big ambitions for technology, but also for topics like diversity and diversity in technology, which is something which I work on a lot as well. So I really admire that. I also want to give a critical note that I think working together also counts for political leaders, and they need to make sure that they work together to have unified rules and regulations for the tech industry as well, because that makes it easier for tech companies to operate in continents like Europe.
So France is actually introducing this 3% tax on internet giants. That's going to impact Booking.
Yes, yes, correct.
So how much is that going to impact Booking, and are you concerned about other countries that may follow suit, such as the UK, who's planning to introduce a 2% tax on internet giants?
No, we're very worried about this. First of all, Booking follows a traditional tax model that has been out there for retailers in Europe for a long time. We are not against tax reform. We're actively helping to make sure that there's a different situation for the future. But individual countries taking actions with digital tax will create double taxation and will make it very complicated for companies like Booking to operate in the future.
Has Brexit had any impact on Booking.com and people traveling to the UK?
Yeah, no, we do see that overall with Brexit, people still travel to the UK. Also, British people keep traveling. So we do see that they might make different choices or travel more within the country. But luckily, people still keep traveling. It's very important that we keep open borders so people can keep traveling, because travel has such a positive influence on the world.
That was Booking.com CEO Gillian Tans from Viva Tech in Paris. Coming up, from Apple to autos, every business sector is trying to navigate the ups and downs of a trade war. With so much uncertainty, we'll talk about what could be the best way forward. And we're live streaming on Twitter. You can check us out at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. Technology. I'm Emily Chang in San Francisco. Geopolitical turmoil was the order of the week, led off by a near breakdown in U.S.-China trade talks. And the markets are taking the brunt of it, with the S&P 500 falling for the second week in a row. Here's what Cisco CEO Chuck Robbins had to say about it all earlier this week on Bloomberg.
We knew there was a risk of this 25%. Our teams kept working on mitigation, and when this all hit last week, the great news is that our team had done an amazing job of working on our supply chain, which led to a very minimal set of price increases that we made over the weekend, and so everything that we need to do on this front is actually behind us.
I want to bring in Brian Keir now. He is the field CIO of Incorda, where he advises companies on strategy amidst the trade war. Brian, earlier I was speaking with HPE CEO Antonio Neri. They do have some business in China. He talked about some of the different scenarios that they're working through, but clearly a lot of companies making some tough decisions over the last couple of weeks. What kind of decisions are they making?
You know, companies are making a ton of decisions right now. We've experienced a roller coaster over the last year, and companies today are focused on this tranche 4 of the China goods that are proposed to be imposed a 25% tariff as soon as June. And we have about 3,795 different categories of goods that companies need to go through and understand where they fit in their global supply chain so that they can re-optimize their supply chain and figure out whether or not China is a good place to get those goods or somewhere else.
So what should U.S. companies be doing? I mean, what is your advice?
Well, they have to re-optimize the supply chain, and I think the real question here is that if the last week has taught us anything, is that the roller coaster over the last year is not going to end, and we are going to experience a bunch of volatility and uncertainty and a complex environment going forward. And companies need to take that into account as they re-optimize their supply chains. And so I think that companies are going to be looking at their cost structure in China, and they're going to see a 25% uptick, and they're going to have to weigh that against all of their other options.
So let's say we do plunge into a Cold War with China. What are the implications of that? What will the impact on these companies be?
Well, the companies are going to need to re-optimize their supply chain, and they're probably going to need to do like Chuck Robbins did at Cisco, and they're going to say, how do we de-emphasize China in our global supply chain? How do we go somewhere else? How do we repatriate our supply chain perhaps to the United States? Go to alternative countries. They might also be making bets that this is a short-term situation and that it's going to pass. So I think they have a whole bunch of factors that they need to take into account. And the real question is, how quickly can they respond to a constantly changing environment on the ground?
Now, let's say things go back to the way they were. Will any of these companies be worse off if they've already made some sort of critical decisions in the other direction?
Companies, if they go back to the way they were, then Cisco, for example, is going to be faced with a situation where maybe they have foregone opportunities to have a low-cost structure and have supply chain in China because they've gone to other places. And so companies need to take that into account. But I think the real question here is that we've got a complex environment, and companies are going to have to constantly be processing a changing environment. I don't think we're going to get back to stability anytime soon. I think people who have bet on that strategy, have been relying on hope, and they haven't been doing the hard-nosed analysis that companies like Cisco have had to try to re-optimize their supply chain in the face of this trade war.
So you're betting on the worst-case scenario, then, it sounds like.
I think companies need to prepare for the worst case scenario. They cannot have a strategy of hope. They need to really look at their supply chain, which is ever more complex, and they need to take into account all kinds of different scenarios. And so they need to have the people, the processes, the systems, the data at their fingertips. They need to have real-time operational intelligence to be able to make quick decisions on what to do, where their goods are on the ocean, where they are in terms of in the production channel. So if I'm looking at what the U.S. Trade Representative is doing for next month, for example, I'm thinking, do I expedite my production in China and try to expedite those shipments into the United States and beat that 25% tariff? We've got a ton of categories that are going to be potentially imposed with a 25% tariff, and I'm probably fast-tracking production of those goods back into the United States and risking increasing my inventories in the process.
Now, there's another group of companies that's facing sort of the reverse issue, U.S. chip companies, networking companies that supply goods to Chinese companies, Huawei and ZTE. The U.S. is poised to cut off that supply to prevent Huawei and ZTE from getting U.S. parts, which then impacts these U.S. businesses. What should they be doing?
Those companies need to take this into account as well. I think that those companies are going to end up facing a really tough set of months here, and they're going to have to weigh their options. I think that they might have their business models be called into question as well, because the margins on some of those businesses are going to be dramatically affected by a 25% tariff, and as that happens, they're going to have to be looking really closely at product lines, customer profitability, all sorts of different scenarios, and maybe rethinking their businesses and their business models.
All right, Brian Kier with Incorda, thank you so much. Of course, we're going to continue to follow every headline as they come in. Meantime, L'Oreal CEO Jean-Paul Agon says he doesn't expect to see any slowdown in China. Instead, he expects Chinese sales to grow 30% again this year. He spoke to Bloomberg's Caroline Connon from the Viva Tech conference in Paris.
I think it's not a good thing, definitely, and I wish that eventually they will find an agreement. But as you said, it would have a minimal impact for L'Oreal. We usually produce locally in the US for the US, in China for China, in Brazil for Brazil, etc. So we'll see. But for L'Oréal, we should not be impacted.
So you are seeing now a marginal impact in the US?
No, the US market today is pretty flat, I have to say, which is a bit surprising because the economy in the US is very good, as we all know. Unemployment is very low, but consumption is not very dynamic. So I don't know if it's related to this. I don't think so yet, but it's true that today we are seeing a flat market in the US.
So the US consumption has been flat, as you mentioned. That was the case last year. That was the case in the first quarter. Have you seen the situation improving over the past couple of months?
Not really. Not really. Surprisingly, again, because we thought that with a good economy, the US market would be a positive market this year, and it's not happening yet. But you never know with the US market. Sometimes it's a bit unexpected, and I'm still confident that eventually things will go right.
So you don't think we're going to see any improvement in the short term, especially with this new trade uncertainty?
I don't think so. I don't think so, but anyway, for L'Oréal, we are completely global. Asia has become this year, for the first time in the history of the company, the #1 region in terms of business. And we are doing extremely well in Asia. We are the #1 company in Asia, but also growing a lot. Not only in China, by the way, everywhere, Indonesia, India, Malaysia, Philippines, everywhere. So definitely this year, Asia is going to become the engine of growth for L'Oréal.
And China especially. And of course, China is the other side of this trade war, and they are also retaliating in this trade war. Are you seeing any extension, any impact on the luxury cosmetics of L'Oréal in China?
No, not at all. We don't see any slowdown in our business. Consumption is still very dynamic, very positive. Consumer sentiment seems to be still strong. So no, so far so good. For us, the Chinese market is still very dynamic.
So what kind of growth are we going to see in the luxury division in China this year? What kind of growth?
It may be very strong. We did last year plus 30% for our business. I'm not talking about the market, but for our business. And why not the same? So we are pretty bullish. But we are also, doing what it takes to build this growth. For example, we are really investing in terms of media, in terms of digital, in terms of content, recruitment of millennials. So we are also fueling the growth that we are enjoying.
Jean-Paul Agon there, L'Oréal Paris CEO. Coming up, the new seed fund, Lead Out Capital, has already attracted some of tech's biggest names, from Melinda Gates to Reid Hoffman. We will tell you where they are putting their money, the investors, Facebook alums. This is Bloomberg. Former Facebook executive Alison Rosenthal is one of many company alums who's moved into investing. But unlike some of her colleagues, she says she's focusing on non-obvious founders. Rosenthal is launching Lead Out Capital, a new $27 million fund that will invest in early-stage startups whose founders are from or cater to underserved communities. The fund has already been backed by tech titans like Melinda Gates and Reid Hoffman. Joining us now to discuss, Lead Out Capital founder and managing partner Ali Rosenthal. Thank you so much for joining us.
Thank you for having me.
So what do you mean by non-obvious?
Yeah, so these are founders who are often overlooked by traditional private equity or venture investors. Oftentimes they're women, underrepresented people, but diversity, as it turns out, comes in 32 flavors, and traditional venture has celebrated pattern recognition in many ways, and we think that has caused a gap in the marketplace, one that I feel well positioned to serve.
So you've already made 5 investments for companies led by women, 3 companies led by Latino women.
Yes.
Tell us about these companies.
Sure. So far, we, as you said, made 5 bets, and 4 of them, I'm proud to say, are led by women. 2 of them are actually a woman CTO and a woman CEO. These companies are all over the world. One of them is out of Puerto Rico, another one is out of Oakland, and another one is out of Barcelona. And all of these technology solutions are serving markets or opportunities that have been either overlooked or underserved by technology, especially recently.
Now, you worked at Facebook, as have some of the other investors at your new fund.
Yes.
How is that informing where you're placing your bets? I mean, is there any thesis behind social networking or messaging or whatnot?
Sure. So we are very much a founder market fit thesis. Ours is one of sort of network discovery. So one thing I learned at Facebook is a large part of Facebook's success is premised on their ability to just relentlessly execute. And so we look for people who really value execution, but we also look for founders who value diversity and inclusivity in company building and look to build teams, especially early on, that are cognitively and intellectually diverse. And we think our networks as founders and a broader group of LPs, which as you mentioned, include Melinda Gates and Reid Hoffman, several of my early colleagues from Facebook, really lend themselves to helping these early teams build not only skills and networks, but people who think and process information differently.
Now, Facebook is having a lot of problems, as you may have noticed. It seems like scandal after scandal, now privacy issues, dealing with what goes up, what comes down on Facebook. What do you, having worked at Facebook for a very long time, and I'm sure watched it from afar, you also joined a messaging company that tried to compete with Facebook. What do you think is the driving force of some of these issues?
Well, as you mentioned, I haven't been at Facebook for quite some time. As someone who consumes news, I certainly have noticed some of the issues. But I have a tremendous amount of faith in the management team to actually attack these things. And I think they do so in a really thoughtful and diverse way of thinking and approaching the issues that they're facing. Facebook was very, very young when I was there, and we were thinking a lot about scaling and driving growth. And now it's a very, very powerful company with broad reach. And yeah, they've got some problems that they've got to face, but I have a lot of faith in their ability to do so.
Chris Hughes, co-founder of Facebook, wrote a much talked about op-ed in the New York Times where he argues that Facebook should be broken up, and he also sort of says the opposite of what you say about the management team. He said, Mark's influence is staggering, far beyond that of anyone else in the private sector or government. He surrounded himself with a team that reinforces his beliefs instead of challenges them. Mark's power is unprecedented, un-American, and it's time to break up Facebook. What's your reaction to that?
Well, to be honest, I was so heads down trying to launch my fund that I was aware of it, but I haven't spent a lot of time thinking about it. And I'm also not an expert in antitrust, so I think there's an interesting debate going on. It's probably good that it's being debated, but I don't have a strong point of view.
Well, you do have experience trying to disrupt social networking and messaging. And do you think that Facebook, having WhatsApp and Instagram, can be disrupted? Do you think that a startup out there can be the next social networking platform or the next messaging platform, given your experience trying to do the work that you did before you started your...
Sure, I do actually. I mean, actually, two examples of companies we've recently invested in are what I would call vertical social networks. So PawScout, which focuses on pet owner communities, as well as a company called Booksloth, which focuses on readers and people who love books. And I actually think people still want to connect, and think people will leverage technology to connect. They might do so in a more vertical way. That's a bet we're making, and so I am hopeful that we will be disruptive in some ways to Facebook and other big social media platforms with the investments that we make.
Do you find that companies are making different choices about privacy, some of these new companies, than perhaps Facebook and other companies made in the early days?
Certainly, but we were Facebook and some of our brethren back in the day were actually defining what social media was, and now we have a better sense as a community, as a society, for what social media is. I think nowadays with GDPR and other sort of privacy policy, both abroad and here, certainly the companies that we will be investing in have to think about it in a different way than Facebook and Friendster and Twitter did when they were getting going.
Now, in running your fund, I'm sure you could have joined a number of venture capital funds. Everybody's looking to hire talented women investors now, and you decided to start your own instead. With things like All Raise, Backstage Capital, which has explicitly said we're investing in women, Black, and gay founders. Yep. Why do you think there's still an opening? You know, what are they not addressing that you are going to address?
Sure. Well, actually, Bloomberg did a great piece the other day about just the numbers, and one of the things that really drew me to Melinda Gates was her leadership on frankly, the single-digit percentages of people of women and underrepresented people who own these businesses. So we've got a long, long way to go. We're not a quota-driven fund, but we are as a woman-led fund and group of people who represent fundamentally and by definition a different set of networks. You know, we're one of a small number of new entrants to the marketplace, and for me, I was really focused on systems change. So if you think about how systems change, it's a matter of coverage of what's wrong with the system, the incumbents actually doing something incremental, hiring more diversity decision makers, and that's good, but you also need new entrants. And I felt really, really importantly that I wanted to be a new entrant and push the system in a direction I'd like to see it go. I think I don't know Arlen, I don't know some of these other folks, but my sense is that they probably have a similar mission, and there's a lot of work to be done before we're at, as you well know, before we're in a place where, frankly, the best entrepreneurs are getting the looks that they deserve from capital.
Absolutely. All right. Well, thank you so much for sharing your ideas with us. We'll be watching. Lead Out Capital founder and managing partner Ali Rosenthal. Okay, still ahead, more cities wrestling with the ethical fallout of facial recognition technology. We'll explain why this tech is advancing much faster than you think. This is Bloomberg. San Francisco is the first American city to ban facial recognition software used by police and other agencies. Bloomberg's Quick Take explains why the tech's advance is so alarming to regulators, to the public, and even to the people developing it.
In a tweet thread exchanged with JetBlue on April 17th, writer Mackenzie Fagan had a few questions about the airline's new boarding procedure. No boarding pass, no ID. Instead, a camera and screen verified her identity against a U.S. Customs and Border Patrol database, then let her on the plane. Some passengers might consider the increasing use of facial recognition in everyday life convenient. Some might think it's Orwellian, but it's already everywhere. The question is, how far will it go? Turns out, even some of those developing the technology are scared of what the answer might be. This is your Bloomberg Quick Take on facial recognition. In May, San Francisco became the first American city to block police and other agencies from using facial recognition software.
The biggest concerns are really all around civil liberties and whether you essentially enable a kind of totalitarian state with this technology, and which seems to be sort of the direction that things are heading.
So how'd we get here? Like other artificial intelligence applications, facial recognition initially developed slowly, beginning in the 1960s. With the help of newly available high-def cameras, machine learning, and giant databases of photos to increase accuracy, it advanced in a hurry.
Facial recognition is basically a technology that takes images from video cameras and tries to identify the faces of people in those images. It does so by taking some key points in the face usually and doing measurements of the distance between all those various points.
In December 2018, London police made their first arrest based on facial recognition after cross-checking photos of pedestrians in tourist hotspots against a database of known criminals. In New Delhi, a police trial reportedly identified 3,000 missing children in just 4 days. So if it involves catching criminals and finding missing children, why would anyone be against it? For that, one might look at the most developed facial recognition network in the world, in China.
CCTV and facial recognition have been used in combination to create this sort of vast surveillance apparatus, and that's been particularly applied against certain ethnic minority groups. But even in Western democracies, there's a concern about police departments using this technology to try to find suspects or even people who might be involved in legitimate protests so that they could be tracked.
And those are just concerns about the technology when it works as intended. A study from the MIT Media Lab found that white men in a sample were correctly identified 99% of the time, while error rates of up to 35% were found when it came to darker-skinned women.
Microsoft came out last year. It was the first major tech company to do so and say they really feel uncomfortable with deploying this technology until there's clear regulation around it. They were then joined by Amazon, which kind of seconded those calls. It seems like some other companies are kind of plowing ahead without such qualms at all.
To stake out some guidelines, the Algorithmic Justice Center and Georgetown University Law Center unveiled the Safe Face Pledge, which asks companies not to provide facial AI for autonomous weapons or sell to law enforcement unless explicit laws are debated and passed to allow it. A few companies have signed on, but notably not Microsoft or Amazon, possibly loath to lose the opportunity to sell facial recognition to police departments and governments the world over. So what's preventing your image from saying a whole lot more about you than it used to? Face it, not much.
You can watch more videos from the Bloomberg Quick Take team at Bloomberg.com. And that does it for this edition of Bloomberg Technology. Remember, we're live streaming on Twitter. You can check us out at Technology and follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.